Hi, I'm Jim Cramer with our energy expert, Dan Dicker, and he's got some great stuff. Dan, we're in some weird position in oil right now where bad is good, and I think you've got a great narrative about it.
Yeah, I think that's right. This is the thesis that we got to deal with today because for the first 2 quarters, when we saw reports from the majors and the mini majors, we saw guys sort of being nonplussed about the lower oil price. The T-shirt that they wore was "Keep calm and frack on. Everything's going to be okay." And there were sequential increases in production, and it kept on coming and coming. Nobody talked about the long term. But this latest quarter has shown a lot of guys, particularly Al Walker at Anadarko, talking about
company.
Very good company, lower for longer. Sequential drops in production that we're seeing from the super majors. So my thought is now that bad is good. In other words, you'll need a drop in production in order to clear the gluts that have been plaguing the market for the last year and a half. So when we hear things from CEOs saying that, oh my God, we really have a problem, we have to cut back on where we're producing because the oil price won't sustain it through 2016. These may sound bad and talking down the stocks, but they're actually in the long term good for the space.
Okay, so the bears always come back to me and they say 3 things. Saudi still pumping aggressively, Russia pumping aggressively, Iran coming in. Really doesn't matter what the United States does.
Well, that's not precisely true, but if you break down each of these and see how much of a production gain they might make in 2016 versus what I think will be the production losses here in the United States, I think one wins out, especially since the demand profile continues to go up. The IEA has just said going to look for another 1.3 million barrels a day of increased demand next year. That increases through 2017. When you look on balance, I would say that we are building a long-term bottom here in
Okay,
oil.
that's good. Now, we do periodically have spikes. I mean, we saw a Pioneer put up a number. It turned out they were very well hedged. But do you buy the spikes or you just wait till they come back down?
I think you have time here, and I think that oil is bounded between 40 and 50. I've said this for a long time. When it gets to 50, there's a lot of marginal players who are willing to hedge 2016 production at that number, and they tend to sell it. Gets down to $40, all of a sudden nobody wants to sell the price, and it tends to rally. So that's where we are for the next several months, bounded. But in terms of the stocks, I say to people, look for those opportunities when the prices go down to build positions in many of these. Anadarko, Devon, EOG, these are the ones we talk about all the time.
How about Chevron, Exxon with those really big moves? Maybe
Yeah, I mean, I think Exxon, is just a tremendous long-term bond hold. That's the kind of way you have to look at these.
But they've moved a little too, maybe wait for a pullback in oil to go.
Oh, I don't think they're buys here at all. But again, this is the same thing with the super majors. Wait for your opportunities to buy them as bonds, and then don't look back.
Excellent, Dan. Thank you so much.